So in this video, I'm going to recap upon USDJPY and GBPJPY. But first of all, let's have a quick chat about fundamentals. So right now, the Federal Reserve is in a very tricky location. They're stuck between a rock and a hard place. Last week, we saw the collapse of Silicon Valley Bank, and we've also seen Signature Bank now closed down. This has sparked fears of a potential bank run in the US, and the idea that if interest rates continue to climb, other banks will have difficulties paying these rates, which could therefore lead to a domino effect in the US, where we see other major banks go down. However, the problem lays with the inflation, okay? If the Fed does not continue to raise interest rates and instead they stop or they decide to cut rates to help the banks, then inflation is going to continue to grow due to the strong labor market that we've been seeing in the US, propping inflation up. So the Fed just got put in a very sticky situation, and their next moves will pretty much determine what the markets are going to do. Right now, my expectations for interest rate hikes have decreased, and next week I'm thinking more about the potential of a 0% rate hike, so no change, or maybe a 25 basis point hike. I think at this point, a 50 basis point rate hike is somewhat very unlikely to happen unless we get any other large developments within the next few days, which is probably unlikely to happen. So what could this mean for the US dollar? Well, let's head over to USDJPY and I'll talk about my thoughts with you over there. By the way, before we carry on with the video, I've got a free 70-minute training that you can sign up to right now. It's designed to show you why you're not winning and how you can turn your results around. If that sounds interesting to you, head over to the link in the description. You can join totally free. Now let's get back to the analysis. Okay, so into this week, we saw USDJPY fall off, okay? We had two potential demand zones for buying on this pair last week. We had this area and this area here. Now, the first zone has gone through due to the SVB news, and now we're trading towards this second area, pulling towards the 133 and 132 key levels. Now, this is not guaranteed to be a solid place to buy, and the reason for that is because we have this economic uncertainty around the Fed's next moves. If they don't raise interest rates, the US dollar is going to dramatically fall. If they do raise interest rates, the US dollar should continue to move back to the upside and could give us that short-term pull that we need to bring us towards 139 or 141, where we could start looking for swing shorts through the rest of the year towards 122 and 120. Now, the reason I'm expecting swing shorts to kick in on the markets is because we just got appointed a new governor at the Bank of Japan, and the likelihood of them actually getting a bit more aggressive and a bit more active with monetary policy to try and recover the yen's losses is a lot higher than it was with the previous governor, Kuroda. So later in the year, I'm kind of expected to see the Bank of Japan push for a more aggressive monetary policy, and the US is inevitably going to have to slow down. Their rate hikes have gone pretty far now, and although they can go further, at some point this year, they will have to cut down on the rate hikes, otherwise interest rates will simply continue to go way too high beyond peak rates. So a major focus for me on UJ is going to be looking for a swing short. However, with this SVB news, there is risk and there's potential that we have the swing shorts kicking in from right at the levels that we're at now. And the reason that has become a possibility is because if the US do not raise interest rates, then the US dollar is going to start to fall. And even though the yen right now is not that strong, if we consider the fact that the yen is also a safe haven currency, well, this makes the yen one of the pairs that the money is going to flow into when it leaves the dollar. So dollar outflows in a time of uncertainty will move into safe havens. We'll see precious metals appreciate. We may see crypto appreciate as kind of a speculative safe haven. And we'll also see the safe haven currencies like the Swiss franc and the yen appreciate as well. Meaning if we get flat rates and we get talk in the monetary policy statements around future flat rates or very low interest rate increases or even cuts in an extreme scenario, then USD-CHF and USD-JPY become very attractive sells. On the flip side, gold could be an attractive buy to take us higher towards the high 1900s. So where do my next moves lay with this pair? Well, last week I gave you the ideas to either buy from this area with confirmation or buy from this area with confirmation. Now, unfortunately, we rallied straight towards the 138 target without getting an entry, and now the market has come down and not provided any confirmation. So there was no trades here for us last week, but this week I will be interested to see how we react around this 132 key level. Now, we're looking towards the CPI information tomorrow. If we see that inflation has indeed slowed down quite a lot, then the chance of a flat interest rate next week becomes a lot higher because it shows the inflation is being controlled by their current actions, so they don't need to go so aggressive on raising the interest rates. If, however, we see that inflation has been stagnant, we could be looking towards a 25 basis point rate hike, or even if they do pause for now, the hikes will likely continue later into the year when things are a little bit more sturdy in the economies and for the banks. So correlating that into a technical perspective, USD-JPY could be good for buys around 132, but we want to see what the Fed says first. So we could roll with the technicals for now. And if we get the right confirmations, we could go for a buy. And by the right confirmations, I mean we need to see a shift in the lower time frame market structure on the 1 hour or the 4 hour time frame before we were to make any buys. But if we are to buy, we do need to keep a heavy focus on the fundamentals and news from the Fed, because at any moment, if they release that they're keeping interest rates flat, this could easily tank down and head down towards new lows under 127. So for now, following the technical flow, I would like to see buys from this area with confirmation. And then when we come into 139 or 141, this would be where sales come in. This gives us quite a few hundred pips to the upside of potential buys, and then thousands of pips to the downside in potential shorts. But like I say, if the news comes out dovish for the Fed, we could simply take out these lows and we can start positioning into USDJPY short ahead of time to take ourselves into that swing trade to the downside. Now, GBPJPY is another one I covered last week, and I wanted to see this buy from around 162.5. Now, as you can see, that did not happen. I did get into one position last week and it did lose. I got took out by a pip down here before it rallied 100 pips, which was painful to say the least, but these things happen, okay? Now, my bias has somewhat shifted on GBPJPY simply because the Japanese yen is going to be doing better at the moment due to the uncertainty in the US. Japanese yen being a safe haven, money is going to flow into the Japanese yen, and that is what is pushing down GBPJPY. However, the pound does have claimant count data tomorrow. So what we could be looking for is if this leads into this area around 159, 160, this demand here, we could actually be looking for a buy if we get any positive news for the pound, because that would then push the pound up against the yen and allow us to buy this back through the highs towards 168, which is an area where I'm happy to start looking for swing shorts. Once again, if we start to go straight through the lows, we can actually just look for positioning into long-term swing shorts, looking for that Japanese yen recovery later in the year. But this one, I'm a little bit more confident on the buys from 159 than I am right now on USDJPY due to how much USD and Japanese yen have been influenced and affected by the news that's just gone down. So what do you think will happen? What do you think the Fed will do? Do you think they're going to keep rates flat this month and then move forward when things are a little bit more certain? Or do you think there's still going to be an interest rate increase this month? And if so, how much? 25 basis points or 50? Let me know in the comments what you think the dollar is going to do next. After next week's decisions, we should get a little bit more clarity on what the US is going to be doing, therefore which way the US dollar will be going. For now, from a technical perspective, I do still want to see these highs taken on UJ before we start shifting into long-term swings, and on GJ2, I want to see this pull down, buy up, and then sell off. As nice as the technicals look, we must remain focused on the fundamentals because this is ultimately what's going to give us the real market moves. So that's all for today. I hope you've enjoyed this video. Hopefully you can get some profitable trades from this analysis. Let's see how it goes. Thank you for watching, and I'll see you in the next one.